So investors, I have a number of new investors, which means they think they want to be investors and they want to go out and buy an investment property that they can rent and hold on to and build equity in. A lot of times they don't understand what it takes to finance an investment property. So Nick, I know it's a little bit, it's not as easy to purchase an investment property and a little bit more expensive on an interest rate standpoint.
Right.
So what are the requirements if I want to buy, and is it the same if I want to buy my beach house as it is I want to buy my investment property,
Sure.
or is that different at all?
Yeah, let's start with that, I guess. So you have second home, and then you have investment property.
Sure.
Two different things. Second home would be a home that you would occupy. Investment property would be a home you're solely renting out. So second home, for conventional, you're looking at 10% down.
Okay.
Again, you have mortgage insurance adjusters and things like that play into the less than 20% down, but you can buy a second home with 10% down.
Great.
Now that,
Interest rate normal, or is it
Yes.
a little bit higher?
No, same.
Okay.
So that being said, a lot of people are, because investment property interest rates are higher, on average, you're probably looking, it depends on the market, but let's hypothetical, about 0.5% to 0.75% higher. Just depends on the spread on where the mortgage market is at the time. But a lot of people will try to justify and say, hey, this is going
to be my second
home. Right. And that's
when they're not really. Okay.
Correct. So,
and how does your lender figure that out?
Yeah,
Can you figure that out?
It's a distance thing. It has to be far enough from your primary residence. Okay. And usually, second home, think beach, think mountains, think not within your normal.
Got it.
It has to be somewhere far enough away.
Okay.
And so usually a letter of explanation would justify it. And then also underwriters will typically look at the value of, if you own a $500,000 house, your second home, and you're buying a $150,000 second home, they might question that a little bit. Like, you'd have to provide some sort of explanation typically to explain.
Okay. So let's talk about then my investment property. So there's a condo community right down the street. Houses are cheap, rent is high.
Right.
Just makes sense. How do I
Sure.
get into that?
So minimum down payment's 20% down on a investment property.
No way around that. I
Conventional.
can't get into it for anything less than that. It's going to be 20%. Generically speaking.
Generically
I'm sure that there's
speaking,
somebody that will let me do that
can-
somewhere, but
I believe conventional allows for 15% down, but you have significant mortgage insurance and pricing adjustments.
so it doesn't make a whole lot of sense.
Doesn't really make sense. I would even go one step further to say 25% down is sort of really the number. The rate differential between 20 and 25% is like astronomical difference, especially if you're throwing in a condo as well. There's a condo price adjuster. So an investment property, single family home at 20% down versus a condo would be worse.
Okay.
So 25% down alleviates the condo adjuster just in the Fannie Mae pricing table.
Okay.
So, you can get in for less, but if you want sort of good financing terms, you're looking really at 25% down plus your closing costs. Closing costs in our area tend to be a little bit higher on an investment property just because for primary residences, they allow the tax bill to be split every 6 months, whereas non-owner occupied in Maryland, you have to pay the full bill up front. So, and then also, if we're talking about investment properties, closing help from the seller, you can only get a maximum of 2% closing help as well.
So you gotta have some money if you're
right.
gonna buy an investment.
And then banks, the nice thing with investment properties is banks can actually use some of the appraised value. When they go out to do an appraisal, they do a more detailed appraisal, and they'll actually do a rent comp analysis. And you can actually use some of the rental income as qualification as well if you're a little bit close.
Oh, wow. Okay.
So, it's definitely, if you think it makes sense for you, it's worth pursuing and running the numbers and seeing what makes sense.
Cool. So the basics, generically, 20% down to get in. Better to do 25% down because the rate difference is significantly better.
Correct.
And then maximum allowable closing cost help is 2%.
Yep.
Can I get a gift to buy a?
No gifts allowed.
No gifts allowed at all.
No gifts.
Can I tack into my 401k to buy an investment property? We've talked about some of that stuff. And maybe that's dependent on the 401k and HR, and that
really,
has nothing to do with you.
Right.
Okay. Cool. 20% down, at least 2% back in closing help at a maximum. So ultimately, you got to have a little bit of money to be able to get out there and buy investment properties.